China has reported better than expected trade data, adding to optimism that growth in the world's second largest economy may be rebounding. Exports, a key driver of expansion, rose 14.1% in December from a year earlier. Now, most analysts had forecast a figure closer to 4%. Imports also rose, climbing to 6% and indicating stronger domestic demand. Now, there have been worries about the state of China's economy after growth fell to a record 3-year low, but not everyone is upbeat about the surge in figures that are coming out, with some analysts, particularly at Goldman Sachs, casting doubt over whether the data can be trusted coming out of China. Joining me now to look at whether or not the Chinese economy will be able to rally and get the global economy out of its rut is the CEO of Frontier Advisors, Martin Davies. Martin, thank you so much for coming on to Beyond Markets. The data coming out of China, people are suggesting that everything is not as it seems. Is this China skeptics, or is there a real validity to their suspicions that we might not be seeing the real picture here?
I think the suspicions of accurate data of China are valid. However, it often results in almost a senseless debate as to what the growth figures are going to be. For example, in the next 2 weeks or so, China will release its 2012 GDP performance figures. There'll be debates of whether it's 7.7%, 7.8% or 7.9%. It doesn't really matter. The origin of the often distorted or questioned figures is that provinces and respective leaderships of provinces are judged on and are ranked on economic performance. So often there's a massaging of the figures, a sort of exaggerating the good news at times, and maybe the hiding of the bad, particularly when it comes to non-performing loans in certain sort of property sectors particularly. But the general trend in China is, again, growth this year will be 7.5 to 8% band, whether it's 7.5 or 8% doesn't really matter. So growth in China is very robust. I go far to take it a step further. By 2013, we may even see, with a new emerging leadership in China, which will be sort of finalized middle of March with a new government, we may see growth accelerate in 2013 compared to 2012. And that's almost sort of counter to what most analysts are saying.
Now, of course, the sectors that people are pointing to where you've had the surges, manufacturing, and of course also services. What is driving the services sector? Is it the fact that many Chinese are now leaving the countrysides, going to cities? Is that what explains the upswing in the figures in that sector?
Well, just on the urbanization thing, this is a constant story of China as we underpinning the whole resource demand and resource super cycle the last decade and a half or so, is that approximately 1% of China's population urbanizes every year. So that's about 15 million people come to the cities on an annual basis. Now, that's significant. A lot of talk, an article in Bloomberg this week, Bloomberg magazine, was around this property bubble. They talk about the very high end in the Shanghais or Beijings and this place called Ordos out in sort of northwest China. That's not the real story. That's very, very small in terms of the greater China story. There's significant demand at a lower end of the housing sort of scale, lower end of the housing market. So bubbles, gross exaggerated. It's nowhere near, as some people have said, a Dubai or a Dublin type situation. Nowhere near that at all. Again, the last 2-3 years, property prices remained very robust.
Now, let's bring it closer to home, of course. We know that China is increasingly playing a big role on the African continent. In South Africa, we have the upcoming BRICS summit that is coming in March in South Africa. Take us through what a robust Chinese economy and an upsurge in growth, particularly manufacturing and the service sector, is going to mean for trade with Africa.
Look, I would argue that underpinning sub-Saharan African growth, IMF forecast this year 5.7%. It's robust, but still largely commodity-driven, oil and gas-driven story to an extent. That's been underpinned by Chinese growth itself. So there's this coupling effect, Chinese growth pulling along Africa with it, and that's resulted almost in a sort of geo-economic shift away from Africa's relations with the old world, exacerbated, accelerated perhaps post-2008, towards the new, centered around China. South Africa specifically, you mentioned BRICS Summit, end of March. We'll be hosting a BRICS Summit. It's very, very important. This is every 5 years we'll get to host this, providing membership stays the same. It'll be Xi Jinping, the new Chinese president, who will come into office middle of March, his first visit abroad, outside China, coming to South Africa.
Significantly coming to Africa.
Very, very symbolically important for us. Coming to Africa, coming to Durban, and also probably tagging on a few other countries in the region as well, picking up from Hu Jintao's they visited in February 2007. So I think the politics is definitely aligned. I would argue that perhaps membership of the BRICS has been the Jacob Zuma administration's greatest foreign policy success to date, and I think we can certainly accept that. The question is, how do we leverage it? It was reported in Business Day last week that Minister Rob Davis DTI is looking to leverage access, as you mentioned, manufactured products, leverage market access for manufactured products from South Africa into China. Now that's very difficult, but perhaps I would say at least perhaps we haven't quite yet, maybe we will see post-Durban, post-March, greater political leverage for more market access into China. We are a member of BRICS after all, and there's no reason why competitors like Australia, Canada, especially in the agribusiness field, enjoy greater export quotas to China than what we do.
Now, of course, when President Jacob Zuma was in China last year, the point was made that this relationship needs to be recalibrated, that it needs to be a two-way street instead of China just coming here extracting, raw materials. Do you think that Mr. Ping, the new leader coming in, is going to be able to accept in a way that one would expect Hu Jintao to have internalize that message? Would the new Chinese leadership be open to listening to that same message coming from big economies on the African continent such as South Africa?
I think a couple of points. Firstly, Jacob Zuma made that point in July last year in Beijing during the China-Africa sort of FOCAC summit. It was very, I think the point made was perhaps over-reported by many in the Western press at least, but Chinese press didn't pay too much attention to it. I think the second point is increasingly is that despite what Chinese politicians say, China's economy is increasingly marketized. 70% of GDP comes from the private sector, companies you and I have perhaps never heard of, not the stereotypical sort of big SOEs. So political pledges to procure, governments can't make those decisions, companies can, and Beijing increasingly has less control over companies, even state-owned companies, which act most of the time in a very private commercial sort of fashion. They're not so much agents of the state as one often believes them to be.
Now, we've seen a recent strike by Chinese journalists in China. We know that there's going to be a crackdown on corruption. The new leadership has identified that as one major issue. How will the continued reforms within China affect China's capacity to leverage and to interact with the rest of the global economy? Is it going to make China an even bigger force? Is it going to be harder to kind of drive an anti-Chinese sentiment once those reforms get underway?
This is a very key point. I was in China 14 times last year, and the sense is toward the last year of the Hu Jintao administration is that his government has failed. It's been very successful, obviously, in terms of the economic growth, the headline growth figures, which are relatively important, but also the rise of the state-owned enterprise sector, which is resulting in a lot of resentment, squeezing out private sector activity. The state-owned sector is not good. Monopolistic practices not good for the economy, ultimately. So he's getting maybe a D or an E on those sort of scores. But the key issue is, as you said, political reform here. Changing China, which is changing China, is that the internal political reform of the party, which is slow and it will speed up, not too much, but steady as you go, and we will see that incremental reform and opening and more transparency, I think, is a key word here. Not democracy so much as transparency. I think that's more important. I think the second issue is that what really is changing China and is changing China quicker than what the politicians are is social media. You have about 650 million Chinese online now in social media. That's creating significant pressure for free flow of information, journalists venting their frustrations, and ultimately changing the country and
Martin,
society.
of course, we can talk until the cows come home, but we have to leave it there for now. That was CEO of Frontier Advisors, Dr. Martin Davies, discussing China's economic prospects and its impact on Africa.